Hello and welcome. You're watching All About Your Company here on ET Now. I'm Harsh Saita. Today we're going to be talking about Automotive Axles. Why are we picking this company? Well, you've seen very strong numbers on the CV side of things. We've spoken to CV financiers. We've spoken with CV players as well. And there is a buzz and an uptick with regard to CV. This is one way to place CV through the auto ancillary route, and Automotive Axles fits in perfectly into that particular category. Now, let me start off with what I want to know about Automotive Axles. Automotive Axles till FY25 was actually selling 80% of its products through a subsidiary called MHVSIL. It's not a subsidiary of Automotive Axles, but it's a company, it's a completely separate company, so it's not a subsidiary, it's a completely separate company owned by the promoters of Automotive Axles, and they held the client relationships. I want to understand, this has changed now, starting FY26, so they're routing all their client relationships back to Automotive Axles, and as a result, all of these sales will actually be recognized, which was always recognized in Automotive Axles' P&L, but with the markup will be recognized in the P&L of Automotive Axles. So that's the first piece I want to know. And I also want to know what component of the top line of Automotive Axles will now be exports, and what that will do likely to margins as well, because the MHVSIL, which is a subsidiary, used to keep a spread or a margin as well with regard to what they used to onward sell. So it'll be interesting to therefore see what impact this changed structure of 80% of the sales will have on the top line of Automotive Axles. That's the one or two key pieces, and thereafter, therefore, what will the impact on margins be? The third piece is what we just spoke about, the domestic CV cycle. What's happening there, and whether we are seeing a meaningful turnaround there. The fourth piece is the global CV cycle. They have exposure to global OEMs as well, and therefore what's the outlook there. And the fifth piece is with regard to the promoter. The promoter has bought American Axles. Right now, if you have already got an interest in the US and certain clients could be coming to India to purchase product, the fact that the promoter has gone and bought a US subsidiary means that those clients may not come to the Indian subsidiary to buy product, and therefore I'd want to understand what component of the sales is US based and what's the rationale behind this acquisition, if at all any, and what risk does it pose to Automotive Axles in particular. The sixth piece is growth glide path. Now, in terms of the top line aspiration, they plan to double their top line from 2,000 crore to 4,000 crore by FY29. I'm trying to understand the underlying drivers, because volume growth seems absent, at least for the moment. And the glide path towards that is what I'd want to check, so that you, the investor, can actually track that glide path as it plays out. If revenues were to double in the next 4 years, that means a significant positive. So we'll try and get a sense of how all of this is playing out. But let's start about the company. Let's try and understand what the company does. It's a company which Bharat Forge and Meritor HVS JV incorporated in 1981. So both of those are the promoters currently as well. They both own 35% each of the company. Who is Meritor? Everyone knows Bharat Forge, but Meritor is a major global supplier of axles, brakes and drivetrain parts. I'll explain some of these to you, but for the moment, it's in the same space, but it's a global player in this space. It manufactures, the company now manufactures axles, brakes and suspensions for commercial vehicles in particular. It has 3 plants, and you can see those. Let's talk about the products now. Drive axles, those are rare assemblies for trucks up to 320 horsepower. Brakes is also something that they manufacture. Non-drive axles are the axles. An axle is an auto component which connects both the wheels. So the rear wheels is the drive axles, and the non-drive axles are the front 2 wheels, which allow the car to turn or the truck to turn. So they manufacture both of them. Off-highway axles is also something they manufacture. for cranes and for other equipment, you know, the road construction equipment that you typically see, a lot of that also requires axles, and that's what they produce. That's off-highway axles. Suspension, everyone knows the car suspension, which allows, or the truck suspension, which allows for cushioning of any jerks which happen or may occur during the driving, during the drive. And then there are gearing components as well, which they manufacture. Let's talk about the revenue mix, and the revenue mix largely constitutes three products. Drive axles, which is 57% of top line, brakes, which is 22%, and suspension, which is 20%. Let's talk about some of the clients that they have, and they have several, mind you, but just some of the domestic ones, the major ones being Ashok Leyland, one of those clients which is a big client for them. Also, there is M&M, Tata Motors, Volvo, Cummins. There's also a Mercedes-Benz, which you will see on that client list. We spoke about how a lot of the top line comes straight into India, but that's largely because MHVSIL, which is that key subsidiary which we spoke about, is an Indian, or rather it's not a subsidiary, but the key MHVSIL entity that we spoke about is an Indian entity, and therefore all sales routed through it are also treated as domestic. Therefore, FY25 was 100% domestic sales, and 80% of that sales was to MHVSIL. So I'd want to understand what the breakup within MHVSIL is now that all of those sales are routed through Automotive Axles. We'll try and understand that part as well. Going forward, basis the supply agreement, which has been terminated, all of the sales will be routed through Automotive Axles alone. So they will enjoy a slightly better markup, a slightly better margin. What this may do with financials, we'll just try and understand that better when we are having our conversation with management. Now let's talk about the metrics that we always do. The last 3 years, you'll see FY22 was a tough year in terms of the CV cycle. FY23, we saw a pickup. Thereafter, it's just been absolutely flat. There's just been no growth whatsoever. So we've given this a thumbs down. Just unfortunately, there's no growth pickup that we are seeing at this point. In fact, H1 FY26 also, the numbers in that sense look relatively difficult. A -4% on top line, -4% on EBITDA absolute, and net profit was up just about 3%. Now let's talk about the EBITDA numbers itself. The EBITDA number also very similar kind of trajectory that you saw with regard to top line, and net profit as well, largely in very similar fashion to the top line. You can't really talk about CAGR here because the base was just so depressed in FY21 due to COVID, and FY22 as well. There was just a bit of a bounce back. That base will not do complete justice, or the CAGR will not do complete justice, just given the very, very low base that they were operating out of in FY22. But after that, we've seen a stagnation, which is what the concern is. Can that pick up is really the question. Let's talk about the margin trajectory though, and what you will see is that while there is a very heavy reliance on steel here for Automotive Axles, their margins have been absolutely range bound, 9% to 11.5%, which is very creditable, that despite everything that's playing out, they've got very, very decent margin trajectory in that sense. Let's talk now about the balance sheet. So we've given this a thumbs up though, because margin's fairly steady. Let's talk about the balance sheet now. In terms of the book value, it's at around 980 odd crore. It's a 3,000 crore market cap company, so the price to book is around 3 times. And there's no borrowing on the books, so no leverage, and the cash bank balance also is okay, just about 15 to 20 odd crore. Used to be around 80 crore, come down to 20 crore, but nothing of a concern per se. No borrowing on the balance sheet, so looks fairly clean in that sense. A thumbs up from our side on that one as well. Let's talk about the cash flow now. In terms of cash flow conversion, it's been choppy. A lot of money sitting in inventory, in receivables, and therefore, it's while FY24 was a very good year, FY25 the conversion hasn't happened. FY23 also not full conversion happened, which is a bit of a concern, which is why we've given this a neutral. We want to wait and watch as to how this plays out and why this is so. In terms of the return ratios though, so despite capital getting blocked in these places, you look at the way in which return ratios have moved. FY21, 22 were tough years, But FY23, 24, 25, despite growth not kicking in significantly, you've seen a very decent 17 to 22% kind of ROCE number, which is fairly healthy for a company like this. And therefore, we've given this a thumbs up. Let's talk about the shareholding now. Promoters own roughly 71% odd of the company, 35% each. FIs own 1% odd, just below 1% in fact. 14% are held by DIIs and 14% by the public. Public in terms of number of shareholders hasn't gone up materially, but that's broadly the brush in which we see the shareholding pattern evolve. Let's talk about management guidance. They are expecting FY27 volumes to decline by 3 to 4%. That's the guidance given. I'd be curious to know why that is so, because GST ideally, the benefits of it, at least in the domestic economy, seem to suggest a pickup. And therefore, why isn't Automotive Axles benefiting from that is what I'd want to know. Industry is expected to stabilize in FY28-29. An upcycle in FY29-30 is expected. They're expecting to double their top line by FY29. Margins are set to improve over the next few quarters as that entity, MHVSIL, starts to push product into Automotive Axles' book rather than selling it themselves. The margins will likely pick up. They're confident of achieving a mid-teens EBITDA kind of level, which is a significant ramp up from their current, current spot. If this were to happen, it's a big thumbs up, but you'll have to wait and watch. I would give this a thumbs up, but slightly cautiously. You'd want to wait and watch as to what management is saying and whether they can deliver on some of these things, and the glide path, as I said, very important. FY28 in terms of valuations, at a 210 rupee profit after tax versus the current 160 rupees. So just maybe a 25% bump up to the current profit after tax. You're seeing a 14 times price to earnings multiple, which is largely in line with how it's always traded and how some of its peers are also trading. So we're giving this an absolute neutral with regard to Automotive Axles. But let me bring on board Nagaraja Gargeshwari, who's the president and whole-time director at Automotive Axles, joining us to take this conversation forward. Nagaraj, firstly, good having you. Give us a sense as to what's playing out in the domestic market where CV is concerned. At the end of Q2, you were suggesting that it's still too early to kind of call whether there's going to be a meaningful uptick with regard to demand. You said that there was positive sentiment, but that sentiment hadn't yet translated to demand. Are you seeing demand translation start to happen? I'm not asking you for numbers, but I'm just trying to get a pulse as to whether you would likely up your guidance as a result of the kind of traction you are seeing.
Yeah, first of all, thank you very much for having me here, and then Happy New Year to everyone. When we look at the domestic trend at this point of time, so it looks relatively strong. The demand drivers. The first of all, it is the aging of the fleet. Many of them are over 10 years, which kind of indicate that newer technology and then newer efficient trucks are required. And the second one, there is a steady spend in the infrastructure projects, whether you take it a highway or mining. So that way we are seeing, it is relatively strong. And the last one is on the bus demand. And when we have seen last couple of years, the bus demand has been steady and growing, which should also kind of help the market to stabilize. Like you mentioned, Q2 was a little bit distressed, but with the GST, where the GST coming from for commercial vehicles from 18% to 28% to 18% coming down, that has really kind of reduced the total cost of ownership for the fleet, and so that way, domestic demand is looking reasonably strong at this point of time.
Okay, so do you see room for upside growth, at least on the domestic front? Would you say double-digit growth would likely get clocked, say FY27, if not FY26?
We see that, the last two quarters, I would say Q3 and Q4, this is going to decide. We are seeing, based on the previous forecast, I think we may be seeing close to about a single digit or a high single digit growth that we are expecting for the coming year.
Okay. And talk to us about how the agreement with MHVSIL has changed your top line dynamic. My understanding, and correct me if I'm wrong, was earlier 80% of your top line would go towards sales to MHVSIL, which would then onwards sell. Firstly, tell us what are the clients that MHVSIL used to sell to? Was it only export or was it domestic plus export? And yeah, first let's start with that.
Yeah, we had a kind of a mixed arrangement for certain customers, for example, Tata Motors, and then, the UD, which is kind of export within the Asia, that was directly being done by us. And then, with the new RPT arrangement, all the sales are happening, from Automotive Axles directly to the both the domestic customers and also the global Cummins drivetrain business. So the top line, it is more reflective of the market condition rather than, whether we are selling it to through my MHVSIL. Of course, the MHVSL is getting compensated for their product technology and then marketing services. But otherwise, our top line is more reflective of the domestic and export demand rather than this arrangement, I would say.
Okay, so now on your revised top line, which includes all of the sales of MHVSIL under the revised arrangement, give us a sense of how much is export and how much is domestic, so that so that viewers can also get a sense as to how diversified are you on the export versus the domestic front.
Usually we don't share the number, but percentage-wise, we are our export is kind of a double digit. With the current, the U.S. market, and you can see it is slightly on the lower end of, what we would like to have. But otherwise, our big chunk of sales is still coming out of, domestic market, which is close to about 80%.
That's perfect. Okay, I've got my answer. And it gives us a great sense as to where you stand. So talk to us about exports, therefore. So this roughly 10 to 20% of top line which comes from exports, how's the traction there? Because domestic, you seem fairly confident now. We've spoken about that. How is export demand playing out?
As you know, especially our major export is to US and Europe. Europe is somewhat steady, but it's not growing the way we would probably wish. But on the other hand, the US, as you have seen, because of there are changes in the regulations, there is a changes in the technology, so which is kind of drive, and then with the geopolitical challenges, we have seen that US market is weaker. We think that it will continue to be weak till later part of this year. So I think we are hoping that the US market is going to come back and have a much better, bring in a little bit more clarity on the demand and capacity side sometime in 27.
In 2027 calendar year. In 2027 calendar year, Mr. Gargeshwari?
Yes.
Okay. And this, one of your promoters buying American axles, does that at all impact the way in which you look at the US or the US strategy at all? And isn't there some sort of conflict if at all there is one?
We already clarified this. One of the promoter buying a competitor has no impact on us whatsoever, because it's a business as usual for us. We have been competing with the other players both in the domestic market and also when it comes to the export with the other Cummins, the plants, their own manufacturing entities. So for us, competition is real. It is going to stay there. It is how we, uh, 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 become, better partner, or we have a better solution for our customers. That is what is going to, help us. So for me, it is not changing. We are looking at export as a very clear opportunity, and that's exactly what we have shared. Our goal of increasing both our top line and bottom line. Export is one critical piece. We've been working on that, and recently I had shared that the investment what we are doing in our manufacturing facility, the phase one will be completed probably by end of this quarter. That should kind of really help us to give a shot for further increasing our export portfolio.
Excellent. And so if I can try and get a trajectory, your aspiration is to double your top line by FY29. Um, the domestic CV cycle is already seeing a bit of a pickup. You leverage likely on that. Are you trying to get in new clients? How exactly is it playing out for you, and what's the glide path looking like? Would you grow linearly, or would it be a dramatic shoot up in terms of your top line in FY28, 29?
You see, we are kind of looking at, there is still a opportunity for the domestic market to grow. So we have been continuously focusing on that. And we want to, the way we look at is we not only protect our current business with the customers, but we also want to, expand it, and then also look at potential other customers who are there, who are kind of vertically integrated. We have been always working towards that. And the second thing is we have been working closely with the new entrants, especially in the electric vehicle segments. So they have been using our product. So there is an opportunity as and when they grow, that should kind of help us our top line as well. And like I mentioned, we are investing in our both capacity and capability, and then into putting in latest technology to make ourselves more competitive when it comes to the export opportunity. I think all these things put together, we should kind of help us. Having said that, and as you are aware, the 25 has been a kind of a little bit of mixed bag, as you can see from our top line perspective. We had challenges both in the domestic market as well as the export market. And hopefully this one will kind of ease out by 27, and by 28, we should be having a pretty strong opportunity there. So while the aspiration is always doubling our sales, I hope all the markets and customers will kind of help us in achieving it. And some of the new products what we have introduced recently in the market should also kind of help us, increasing our share of business.
And what about your margins, Mr. Gargeshwari? You've got plenty of levers. One of the levers is the fact that now a large part of the sales which used to sit with MHVSIL sits now with you, which means that you get to make the additional margin which MHVSIL used to make. Please correct me if I'm wrong, unless you're telling me that the royalty offset happens as a result of that. Just take us through how margins are not going up as quickly as one would typically anticipate if those sales are already getting clocked in your top line.
Yeah, you kind of you can always look at our the results, which is clearly says that we have a little bit of challenge in our top line, so which is basically having putting a little bit of pressure on our kind of fixed cost absorption, and also the product mix is kind of playing a key role here. So we are expecting that all these things will be able to kind of resolve, and then product mix is going to get better as we introduce the new products. And then as and when the export business is going to come back, markets are going to come back. So our again, it will be having a positive impact on our margins, like we mentioned, and you did mention in the beginning. Our target right now is to get into the mid-teens. With the current, the task what we are having on hand, and the investment what we are making and the new product introduction, we are very sure that we will be able to achieve those mid-teens by 28, 29.
Perfect. So mid-teens by 28, 29. Mr. Gargeshwari, last question. And you have a great year on the ground with regard to CV. Do you believe, and basis your interactions with some of the top CV makers, Tata Motors is your client, Ashok Leyland is your client, are you expecting a multi-year CV cycle to play out going forward, or is this just a sudden surge which will likely get dampened? How are you all seeing this? Is it double-digit growth for maybe a couple of years at least?
It's very difficult for us to tell, because you know that what happened recently, we are very bullish in 23 and 24, and then you know what happened in 25 or a later point of 24. So it is a little bit of challenge, but we are confident that at least we will be having on a positive trend for the next couple of years. And the most important thing for us, who are present in a commercial vehicle segment is whenever the cycle used to happen, like a 3, 4, 5 years ago, it used to be like a 20, 30%, downturn we used to see. But a good thing that has happened is, in the CV market, what we are seeing is any changes that is happening is, like a -5%, -6%, and, probably plus 10, 15%, which is kind of bringing in some kind of a predictability and stability in the industry, which is kind of going to really help us in optimizing our supply chain, our capacity utilization, and everything.
Okay. So it's been very good chatting with you. Thank you so much for joining us live and speaking with us. And viewers, I hope this gives you a sense. I mean, in terms of the CV cycle itself, I don't think we got enough in terms of whether that cycle can last over the next 2 to 3 years. But nonetheless, this one, in terms of the glide path and in terms of the targets that they've set themselves, I hope you got enough perspective. But out of time on this edition of AAYC, from myself and everyone who puts this show together, thanks so much for watching.